Hey future millionaires, this is Phil from the Next Chapter team, and welcome to another ETF review. Today's review will focus on 4 ETFs from Charles Schwab. At the end of the review, we will take a moment to see what it would look like if you invested consistently in all 4 funds. But before we jump into the review, please take a moment to like, subscribe, and share. Help the channel grow. Help more people be inspired to get on a budget and save and invest consistently. Now, sit back, relax, and enjoy another ETF review. Now, we'll do a quick recap of what ETFs are and how to buy them. Today's review will focus on 4 funds. The first one is the Fundamental US Index ETF. The next is a Mid-Cap Index ETF. Small Cap ETF is number 3. And then a Fundamental International Large Cap ETF. So again, 4 different funds, all by Charles Schwab. First up, ETFs are a basket of investment securities. They're a big group of stocks or bonds. ETFs prices change all day, just like a stock. ETFs tend to have lower expense ratios and fewer brokerage commissions, and usually are available in many brokerage firms. Now, on the high level, there's 4 steps to figure out how to buy an ETF. First off, you determine what type of account you're going to buy an ETF in. Usually it's an IRA, which is an individual retirement account, or a brokerage account. From there, you open up the account with our investment broker. Then you decide on how frequently you're going to invest. Usually weekly, bi-weekly, or monthly. If you can, try to do it with the same consistency as your paycheck. Then set it up to be an automatic transfer and an automatic purchase. This automation will help you be efficient and consistent in your investing over time. There are a lot of investment brokers out here. Here's just a few just to generate some ideas. Fidelity, Webull, M1 Finance, Charles Schwab, E-Trade, TIAA Craft, Vanguard, and even Robinhood. There are so many out there. Find the one that fits for you. Make sure it's low cost, very low balance minimum, and you can invest as consistently as you want. For each ETF, we're going to look at things like the ETF category, fund benchmark, fund summary, expense recap, and top holdings, and finally fund performance. That's going to help us look at what the balance would look like over a course of time. First up is our FNDX, the Charles Schwab Fundamental US Index Fund. This index ETF has a large cap value as the category and is seeking to track against the RAFI Fundamental High Liquidity US Large Index. Now, expense ratio for this one is 0.25, which means for every $10,000 you have invested, it is just $25 to hold on to this fund. Now, FNDX has 738 different stocks in there. Top companies include Apple, Microsoft, Berkshire Hathaway Class B, ExxonMobil, JP Morgan Chase, Meta Platforms, that's Facebook, Amazon, Alphabet, which is Google, Walmart, and Bank of America. And the sector breakdown includes about 18% in financials, 17.2% in information technology, and 11.3% in healthcare. Then from there, we're all under 10%, but includes categories like communication services, industrials, consumer discretionary versus consumer staples, energy, materials, utilities, and finally, real estate. But what do we come here for? Performance, people. Now let's take a look at what the performance looks like for this one. So the 1 year would have been 18.46, 3 year 9.08, 5 year 13.80, 10 year 11.06, and since inception 11.8. Now our next fund goes by SCHM. This is the Charles Schwab Mid-Cap ETF. Fund category is Mid-Cap Blend. This one is working to seek against the Dow Jones Mid-Cap Total Stock Market Index. And since it's an index, look at that expense ratio. It is crazy cheap, 0.04. So which means for every $10,000, it'd be $4 of annual expenses. Now let's jump into how many different stocks are in there. So our holdings include 497 different companies. This includes companies like Dell, Vertex Holdings, NetApp, Pinterest, Decker Outdoor Corporation, Western Digital, PTC, Tyler Technology, and Exxon Enterprises. Now, let's look at that sector breakdown. You've got 21% in industrials, 14.5% in financials, 13.7% in information technology. Consumer discretionaries is 12.9%. After that, we go all under 10%. And you get healthcare, materials, real estate, energy, consumer staples, communication services, and finally utilities. Let's jump into that performance. All right, check it out. It's an index, and how did it do? All right, the 1 year, 11.19. 3 year, ouch, 1.39. But it picks it up in the 5 year, 8.03. 10 year, 8.42. And since inception, it broke 10%, 10.36. Moving on to our third fund, SCHA. This is the Schwab US Small Cap ETF. This one is the fund category small cap blend. This one is tracking against the Dow Jones and US Small Cap Total Market Index. So that total market index drives, again, the expenses to be super low at 0.04. So it means for every $10,000 you have invested, it would have been $4 annually. Now let's jump into how many companies you get. You get 1,731 different companies, which includes top holdings of Mega Strategy, Nutanix, Carvana, Tenet Healthcare, Wingstop, Elf Beauty, Texas Roadhouse, INC, Comfort Systems US. And then let's look at those sectors. Breakdown, industrial 7.9, financial 16.1, information technology 14.3, healthcare 14.0, and then consumer discretionaries of 13.2. After that, it drops super low, 5 and 6% all the way down. Real estate, energy, materials, consumer staples, and communication services finally rounded out with utility services. Of course, let's jump into the performance. All right, check it out. 1 year, 9.81. 3 year, ouch. This one took a hit of a negative 1.67. But we go for the long-term investing here, right? So 5 year, 7.31. 10 year, 7.12. But since inception, I gotta say, I love it. This one's been around for a while. Since inception, 11.32. Amazing when you can see that above 10% for since inception. Even better, of course, for 10 years, but not bad. Number 4, I know you heard this before, our fourth fund of the day. This one goes by the call of FNDF. FNDF is what you would type into your portal to make a purchase. And this one is a foreign large value. So this one is going against the high liquidity developers US large index, non-US developing markets only. So again, non-US developing markets. Expense ratio 0.25. Annual, so that means for every $10,000 you have invested, $25 per year. All right, now let's jump into it. So holdings include companies like Shell, Samsung, Toyota Motor Corporation, Total Energy, BP, Roche, Nestle, BHP Group, and HSBC Holdings. Now let's check out those countries. Again, 26% in Japan, around 15% in United Kingdom. Then from there, under 10%, you've got Germany, France, Canada, South Korea, Australia, Switzerland, Italy, and then other. But you know what you don't see on the list? US. But you have 959 different international companies, all non-US based. I love it when I see the breakdown that matches what they say. How many different sector weightings do we have for this one? We have a bunch. Again, 959. Financials, 19.4. Industrials, 15.5. Consumer discretionaries, 12.4. Materials, 11%. And then after that, we go all under 10%, but we've got a great breakdown. We've got materials, energy, consumer staples, information technology, healthcare, communication services, utilities, and then finally real estate. Nice spread across many different sectors. And that's what you get with 959 different positions. Now let's jump into that performance. All right. So the 1 year, 12.29. 3 year, 5.23. 5 year, 7.97. And 10 year, 4.63. Now again, a lot of times you go into these internationals to kind of cushion if the US market takes a big hit, because you're going to assume that the overall world doesn't take a big hit. And so you're going to have some varying degrees of performance. But overall, not a bad fund. Now, we're going to wrap it up. So what happens if we invest in all 4 funds consistently in 5 years? We're going to take it to the spreadsheets. We're going to see what happens. It's going to be interesting. All right, now let's take it to the spreadsheets and let's see how this will do over a 5 and 10 year period of time. But first, we're going to decide how much to invest. Today, we're going to do something different. We're going to do $800 per month and see how that turns out. So that means $9,600 per year. Since we have $9,600, it's got to be an investment account because Roth and traditional IRAs have a cap of $7,000 per year. All right, so as a reminder, 4 funds. Our large cap, 1 year, 18.46, 5 year, 13.8, 10 year, 11.06. Our mid cap, 1 year, 11.19, 5 year, 8.03, 10 year, 8.42. Our small cap, 9.81 for 1 year, 5 year, 7.31, 10 year, 7.12. And now finally, our last one, our international play, 1 year, 12.29, and then 5 year, a 7.97, and then 10 year, 4.63. Let's see how we do. All right, so let's switch this over to 5 years. All right, 5 years, you would have had $63,000 in the account. So principal or your cash investment would have been $48,000. Growth would have been $15,000. So the balance again would be roughly $63,000. 76% would have been invested cash or principal, and then the rest would have been growth. So 24% growth. But we're long-term investors here, right? So we're going to see what would it look like if you invested for 10 years. Do we break that magical number of $100,000? Achieved $149,000, roughly $150,000. Let's see what it breaks down to. Again, we have $9,600 per year, so $9,600 per year times 10. So principal or invested cash would have been $96,000, and the rest of the balance would have been $53,900, or roughly rounded up $54,000 would have been growth. So one more time, $96,000 or 64% of your balance of the 149, and then finally $54,000 or roughly 36% would have been the rest growth. Not bad. 10 years of time, investing consistently, you could have some massive growth. That's what this is all about, long-term investing. Hope you enjoyed the review. So many more to come. Invest wisely, make good decisions, and be patient. Compounding interest is your friend. You can do this.
Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here, and please enjoy and see you in the next video.